Welcome to Your Time, Your Money, the show where your time is just as valuable as your money, and we know that. Welcome, Adam. Good to see you today.
Glad to be here.
Yeah, we got a great session today. Today's going to be a burst topic, which we call, shorter segment, but we thought it was, kind of prudent. So, let's dive into it, and and as always, it's your time,
your money. Let's roll.
So today's session, we entitled, how much insurance do you quote unquote need, right? Because a lot of times we talk about insurance and the bells and whistles, the different things that you use insurance for, the living benefits, the whole nine yards, like long-term care. Today we just want to focus on how to identify how much insurance we need.
Right. And that's it starts with a comfort level, but there's the need versus want, right? And then we always have to be cognizant of that when making our choices and decisions.
Yeah, and insurance should always be based off the need, right? No matter how good of a plan or insurance vehicle you have or product that you have, if your need is not met, then your family's going to suffer, right? So everything should be centered around the death benefit, so to speak, right? What is your family going to get when you pass away?
Right. And what's interesting is you have a lot of times people will contemplate life insurance and they'll say, well, what do I care? I'm not going to be here to use this. But that's being sort of a selfish sort of approach, right? Because it's those that are left behind that are left a lot of times holding the bag. So
yeah, well, let's dive down that rabbit hole a little bit. I know this is a shorter session, but we get a lot of objections sometimes to insurance, right? And when you actually think about it, some of those objections are, well, I don't need insurance. And I always say to clients, you're right, you don't need insurance, but you need the cash it provides to your family later, right? Because when you lose your life, it's not just, you're not here anymore. Your income's not here anymore. Your earning potential's not here anymore. All the things you're providing for your family are not here anymore. So we want to get down to an exact number of what your life is worth, and for some people that might be, a little bit, fearful, like, oh my goodness, I'm only worth this much, or oh my goodness, I need this much, right? And we don't joke around too much with it when it comes to the actual dollar that you need, but a lot of times clients will joke about dying when we get in that conversation, right? I'm sure you've probably heard some things that clients have said has been pretty funny.
Oh yeah, yep.
What are you going to do when you die? Well, just throw me in the back and set me on fire.
Right. Yeah, the Viking funeral is always a good one.
Yeah, we get that quite a bit.
Put in the boat and shoot the arrow.
Usually from the men, not the women.
Right.
Or my wife will just remarry, or my spouse will just remarry if I pass away, and it's and unfortunately the joke kind of pushes off really addressing the underlying issue.
Sure. And I think look, there's a lot of fear based on what happens when, and fill in the blank. But a lot of that has to do with the not being prepared, but also not being afraid to make the choice to be prepared.
Yeah. So today we want to focus on how to identify that need. Right, what's out there. And some of the resources we're going to mention today are just can be found by putting it online and putting it out. One of the things you can type in a search bar is insurance survivor need worksheets. And there's a bunch of different ones out there, and some of them are very technical. Some of them, engineering mind came up with them, and they're very exacting. I have a couple examples here. I mean, one I printed out, and it has all the calculations and everything done for you, but it asks simple questions. It asks questions like, how much money do you need to pay off your mortgage, right? How much money do you need for college planning? And then it'll actually have a little subsection that you can click down on. You can pick your college, and it'll put the adjusted tuition to the college. And these programs online are very exacting. And if people take a few minutes, they can come up with an exact number of their need.
Sure. Yep. I was just going to say, and that's a complete valuable tool to know where you stand.
Yeah. I think the gray area sometimes comes into the income need. Right. And how much income do I need? You generally have one, maybe 2 or 3 times your salary and insurance benefit at work with your employer. But people don't realize, how do I calculate out that need? Right. And some of these survivor needs worksheets are really realistic. So for instance, here's one that I printed out online, and it says your income needed for replacement of 20 years of income. Well, we always tell clients you don't need 20 years times 20 times your annual income. This actually works the factor right in. So in their scenario, if you take your income times it by 15, that gives you enough insurance to cover you for 20 years,
Right.
right? Because you're thinking the money's going to be sitting there over those 20 years earning interest. So the difference of what that dollar amount is and what you actually need is made up by interest or earnings on the money.
Right.
You know, and those are some simple things that a client can do: is log on, find a good survivors needs worksheet, take a few minutes and fill it out. And I think listeners would be very surprised with the amount that they usually need.
Right. You know, lifestyles change, things change as we age. And, there's factors in there that we have to always consider as well in doing these types of worksheets.
Yeah, and that's a good point that listeners should do. When you're filling out those worksheets online, you want to fill it out as if the events that you hope to happen are already going to happen. What I mean by that is, if you know you're going to want to have kids, but you're single right now, you may want to put in their college expenses. Right. If that's the goal, the life goal is to have kids and with your fiance or you're newly married, you want to put in those estimates already, because you don't want to have to be going and getting a new policy every time a life changes.
Right. And to that point, when you do that, the cost of insurance goes up as you get older.
Yeah, right. Because cost is set off of health or age.
Yep.
Right. Neither of it get better.
Right. Life expectancy tables kick in.
Yeah. So ultimately, you want to plan out that full need early on, right? And regardless of what insurance you use, it's important to know the need.
Right.
So let's give another analogy of how people can understand their need, separate from a survivor's needs worksheet. But we're going to go through a session right now, which is our community spotlight time, which is always a fun time in our series. Today's community spotlight is Catskill Mountain Realty Group down in Cairo, New York. So 550 Main Street, Cairo, New York, 12413, 518-622-9910. So if you're looking to buy or sell a property, reach out to them. They're down in the Catskills, so servicing Catskill and Ulster County mostly. So once again, Catskill Mountain Realty Group at 518-622-9910. So excellent. So with that being said, if you're looking for a house, you're probably looking to sell a house when you die, right? In some cases. So
Yep. Yeah.
You wouldn't be, right?
Right. I was just gonna say that. Yep.
You'd be dead.
Someone will.
Your survivor would be.
Yep.
So I think that the second way, or the most common way, that you can quickly identify how much insurance you need is using the acronym DIME. So DIME. So if our listeners or viewers can write down on a piece of paper vertically DIME, this will kind of help you put some pen to paper and get a number of insurance dollars you should have. Right. So D is the first thing, which is debt. Now, what would that cover?
That's going to be everything from mortgage, car loans, credit card debt, student loans. Basically anything that is built up on the negative side of your
any unsecured debt, anything that you want to have taken care of so your surviving spouse doesn't have to keep paying on it, or
home equity lines of credit,
things along that lines, right? So that handles D. So you add those things up, total them up quickly. Most listeners can probably do it right in their head and put that down. The next letter is I in DIME, and that's your income replacement.
Right.
And generally speaking, income replacement is your salary that you want to replace for how many years you feel that your family is going to need it.
Right.
We encourage people at least replace it through when the kids are done with college, right? So if you got a 6-year-old, you're going to want probably maybe 20 years of income replacement, somewhere in that ballpark. Once again, on that other table I showed, that's 15 times whatever your annual income is, right? Some people want to go right to retirement. Right. They don't want that gray period between when the kids are out of the house and the spouse isn't eligible for Social Security benefit.
Right. I was going to say, and some clients will look to be, I want it to be for the life expectancy of my spouse, just to make sure that they are always taken care of.
Yep.
So
yeah, and that's probably the largest part of your need is your income replacement. And don't short yourself. What I would tell listeners is don't say, 2 years they'll be okay, or 3 years, because in reality, what major event's going to happen that's going to change their life financially? Not really much is going to come up that's going to provide $50,000 or $60,000 a year. It's not like your spouse is going to go out there and get another job making what you're making.
And you bring up a good point too when it comes to salary. who's the higher earner in the household, and what does that look like, and that calculation of lifestyle, and how affecting of a loss of that salary, what does that do?
Yeah, and to your point, that the DIME or survivor's needs worksheet should be done separately for each spouse.
Right.
Right, because one spouse may be making $200,000, another spouse may be making $30,000,
Right.
and it's not that we're justifying one or the other, but the one that's making $200,000 has more of an insurance need.
Right.
Right. So we have debt, we have income. M is mortgage. So just make sure that your property mortgage is safe and sound and paid off. Don't confuse your PMI or mortgage insurance with insurance that's going to pay off your mortgage. But put your mortgage down. Put the amount that you owe to the bank to make sure it's free and clear. And then the last in the E is education expenses.
Right.
Right. And as I mentioned earlier, that's whether you have kids or you plan on having kids. I mean. You've got 3. I've got 2.
Yeah.
And I can't even imagine what college expenses are going to be by the time they go.
It's going to be insane, and that's a valid point. And there's people that have different philosophies on education. Well, maybe it'll be a community college at first, and then transfer to a 4-year institution. But really, you want to look at the calculation of what the potential could be up to. Even if it is. If someone thinks, well, my child is going to go to Harvard or, someplace like that's going to have a very expensive tuition, do you need to provide all of that? Maybe not, but it's something to factor and consider in your what you feel your need to be.
Yeah, and doing this for over 20 years, I'm very cautious when I hear a client say, hey, I'm covered on insurance, I got $100,000,
Mm-hmm.
right? Because common sense just tells us $100,000 is not enough to cover all those things, DIME. Right. A lot of times it's not even enough to cover your mortgage, or if it is, there's nothing left over for income replacement, debt, or anything along that lines.
Yep.
Obviously you're going to have final expenses. You're going to have other things associated with it. But, the main thing, debt, income, mortgage, and college expenses are what you want to make sure you have covered. And I think it'll be pretty eye-opening if clients do that exercise, because I think most clients, at least when we run the numbers, it's very rare that it's under $800,000 of need.
Yeah. Yeah. And a lot of times, as we were talking about at the beginning here, people say, well, I don't need insurance, or I've got coverage through work, which is that, 2 to 3 times a salary. And when doing this exercise, you get more of a full scope of what your actual needs to be. And that doesn't necessarily mean that it's one type of insurance. It might be a mix of different type, whether it's term, whole life, and a mix of both, just based on expenditure and cost.
Yep. And even if you just went purely with term,
yep,
a long duration term, at least your need is met for the majority of your life.
Correct. Yep.
Think of a hill, right? And as you age, your need may go down, mm-hmm. and as you age early on in life, your need's going to go up as you get a house, as you get kids, you get married.
Yep.
But eventually, when the kids leave the house and the mortgage is paid off, when you're towards the tail end of retirement and you have your assets built up, mm-hmm. your need goes down. But don't skimp on the valuation.
Right. Right.
Don't come up with the funny analogies to dying and why you don't need money.
Right. Yeah. And that's just, of course, usually a reaction to that fear part of it.
Yeah. So, well, hopefully clients can take our advice. They can go online, find an insurance needs, survivor's needs worksheet, or use the acronym DIME in their calculations. Once you do that, if you have questions about individual insurance and coverage and stuff like that, you can always reach the Esli Group at 800-222-3202. We're located at 43 British American Boulevard in Latham. And as always, it's your time,
your money.